In this video, I would like to share with you what I learned when I first started to trade binary options. I would describe my binary options trading strategy that I used for almost 2 years. The strategy made me over 150% annual returns while risking just 5% at any one time. I will also share with you something very extraordinary. Something your broker doesn't want you to know. This is a trick that will allow binary option traders to shift the odds their way. Stick around because this is very interesting indeed. Okay, let's start from scratch. What are binary options? I won't be going into the technical details of what an option is and how it works. A binary option is simply just another derivative of the common option traded across the global markets. Your binary options broker goes to the market, buys the option, repackages it, and sells it to you as a binary option with a massive markup. Call and put. The trader buys the option at the so-called strike price. If the trader bought a call option, he/she bets on the price going higher above the strike price. If the price is above the strike price, even by 1 pip, the trader wins the bet at the expiry date. The same stands for short positions. The trader buys a put option if he/she believes the market is going lower. If the market price is lower than the strike price at the expiry, the trader wins the bet. The broker is the only winner in the binary options market. The guy who invented this industry is a genius indeed. The very basic premise the industry works off is, in a very long time frame, a number of buyers, call options, equals a number of sellers, put options. Based on the above principle, the broker will never lose money, assuming he will be in the business long enough to overcome possible exceptional market swings. The simple genius of the binary option industry is binary options scale. For every loser, there must be a winner. So there are hundreds of buyers, let's call them losers, and there are hundreds of sellers, let's call them winners. In this scenario, payouts on binaries, the broker charges the loser 100% and pays out 70 to 80% to the winner, keeping a whopping 30 to 20% of every bet in his own pocket. Brilliant! To get some perspective, your ordinary FX broker charges you a paltry 3 pips. What a loser he is! If you buy the option for $100 and you lose, your $100 is gone. But the guy who's on the other side of your transaction wins. He receives an $80 payout from the broker. The broker cashes $20 no matter what happens. This is a fat margin indeed. All the binary options broker needs to do is to maximize the trading volume to increase profits and lower the risk. This is why the industry offers such a wide selection of expiry dates. Traders can trade anything from 1 minute to 6 months. The more often, the better. I guess most of the volume is weighted towards intraday expiry, as the industry attracts gamblers looking for a thrill rather than long-term professional traders. This is genius, genius, genius. Remember one simple thing. Getting anything less than 100% of your money you risk is simply bad economics. 80% payout risking 100% every time will drain your account within no time. It's insane to believe you can sustain long-term profits getting less than you risk every time. The guy above will not make it. Odds, accuracy, and the risk-reward ratio in the binary options market. A good binary options trading strategy is naturally one that brings profits on a regular basis. There are a few tasks to be performed before deciding on your trading strategy. Break even. Since break-even is achieved when the total amount won equals the total amount lost, it can be calculated using the following formula. 0 is equal to winning percent times average return minus winning percent minus 1 times average loss. For example, say the traded amount is constant, say every time, average return 70%, and the loss is 100% of the betting amount. Therefore, 0 or break even is 70% minus 1 minus 70% times 100%. Therefore, your winning percentage is 59%. With a strategy which is an average return of 70%, you will need a winning accuracy of 59% or more to be profitable in the binary options trading industry. Expectancy. A more general way to analyze any binary options trading strategy is computing its expectancy. This is a single number that combines the winning percentage with the average return. This number tells immediately if the trading strategy is worth pursuing or not. If the expectancy is greater than 0, you should consider it. If it's not, move on from it. The formula is expectancy is equal to the average return times winning trades percentage minus 1 minus winning trades percentage. Say the binary options trading strategy has an average return of 70% and 65% accuracy. Expectancy is equal to 70% times 65% minus 1 minus 65%, which gives you an expectancy of 0.105. The strategy should be considered sound. It's a well-known principle of basic risk management to keep losers smaller or equal to winners. This applies across all markets. Every trader works very hard to keep losers smaller or equal to winners. It is impossible to keep your losers smaller or equal to winners trading intraday binary options. Your payout will always be 80% of your money at risk. These are the facts. You need to think harder to stay ahead in this market. The trader must go against the odds and design a binary options trading strategy that generates more winners than losers to compensate for the unfavorable payouts. It is not always possible. If the trader is able to generate more wins than losses, with the average loser being less or equal to the average winner, it is definitely a recipe for financial independence. It is a statistically sound approach, and it is sustainable in the long run. Apart from the points covered before, the trader should consider other variables like trading times, asset class, brokers, etc. It is important to get all variables tested before deciding to use them. Profitable binary options trading strategies combine only the most efficient choices. This is the technique I developed trading binary options. This is the technique I want to share with you today. This technique generated 150% return by risking only 5% per trade. 60 seconds binary option strategy, trading candlesticks. On short time frames, complicated price formations are rare. The market is simply too erratic and nervous to form trends. Luckily, there is a great tool that allows you to find profitable trading opportunities nonetheless. This tool is candlestick formations. Candlestick formations are an alternative way of displaying price movements. Compared to the classic line charts most traders know from TV, candlesticks communicate more information and allow traders to make better decisions. The trouble with line charts is that they are unable to display every single price movement. When you look at a chart that displays the price movements of an entire day, the chart has to exclude most price movements and create its charts based only on 15 to 20 prices for the entire day. There is simply no more room. As a result, you miss most of the information. What seems like a straight without much movement up or down could be an optical illusion where prices moved far from the previous opening price but moved back before the next period. This information is crucial because it tells you whether the market is volatile and nervous or calm with low volatility. Candlesticks provide you with more information by displaying the opening price, the closing price, the high and the low of each period. Every single price is included in this way of displaying market movements, which is why you can even look at a chart that displays market movements of an entire year and see every single price this asset has had over its time. Candlesticks make predicting the market so easy that one candlestick is often enough to allow for a prediction. When you have an especially long candlestick, for example, where the market rose or fell significantly and closed near the high or the low of the period, you know that the market was in a strong movement. This movement is likely to continue with the next candlestick, and a 60-second option is the perfect way to make money with this prediction. Significant candlesticks will form on any time frame. When analysing the short time frames, you would trade with a 60 seconds binary option strategy. Candlesticks are a tool that can help you understand what is going on despite the market's erratic behaviour. Learn a few of the most frequent candlestick formations and you will be able to make sophisticated predictions for 60-second options. But if you'd like to take the analysis out of trading and make huge profits with binary options, then click the link in the description below and I will show you how to be awesome.